done going through my slides, Mr. Man, just feel free to chime in. And then afterwards, if we have time and anybody else wants to stick around, we can just kind of have open discussion. We'll cut the recording and then we'll just have free chat, ask questions, and go from there. So, first, right off the bat, obviously, of course, today's DeFi call, we're going to be fixated on DeFi and some things that have happened recently in the market. This past, like, let's just say 2 weeks has been a really great learning curve in our DeFi journey, at least for me, because obviously, of course, I'm live exampling how I'm building my DeFi position. And not necessarily that that's a lot of pressure, but I want to make sure that I'm doing this properly. I want to make sure that I'm not just trying to wing it. I want to not just focus on things because they're offering high returns. I want to survive. My goal is not to become wealthy overnight with DeFi. My goal is to see a rising equity curve over a prolonged period of time, right? And hopefully in taking upon this journey, you guys can actually see how long it takes, the process behind the elbow grease that you really need to actually put in to become a successful investor long term. One thing that I want to capitalize on before we get into this is I wrote down, it's really great to see people making money and all the reviews that have come through CYPRX. I have a screenshot of a folder on my laptop of all the student reviews that we've gotten. And the vast majority of the ones that we've gotten from you all in the Wealth 28 Club, it seems almost as if you all are making, if not making way more than the monthly fee that we charge to even get in the club, which is just so phenomenal to see because the idea is to buy something of value or buy some educational platform and then actually benefit from it. And so seeing people do that live week to week, day after day is really exhilarating and motivating. And I want to keep that momentum going. So I really do appreciate all you all for sharing your reviews and saying, hey, Cypress, Mr. Man, Mr. Aqua, thank you for your time and your effort. So I just wanted to take a second and say to each of you all who have done that, I really appreciate it. I know Mr. Man does, and I know that Mr. Aqua does as well. And so let's keep that going. Let's constantly work on sharing and being open about our losses. And when the market's in a downturn, being open about what to do and ask questions so that way we can all kind of camaraderie and we can learn from each other's mistakes. So I wanted to just remind everybody our goal. Okay, at least my goal. Again, this is all me. This is my strategy. This is me making adjustments. And if you all want to take bits and pieces of that information and apply it to your own strategy, do so. If not, disregard it and move on and formulate your own path. But I want to remind everybody what our primary goal is here at CYPRX and what our objective is in DeFi. And so as investors, because this is going to full circle for this PowerPoint. Okay, we're going to come back to this and you're going to see how it full circles and why understanding and establishing goals, a vision, and what you want to accomplish is important. Because if you don't have this, you will quit on yourself. And I'll explain why. Okay, once we full circle, when we get to the emotional part. As DeFi investors, our goal is to maximize passive income generation, right? It's not to become millionaires overnight. It's not to generate $500,000 a month right off the starting point. It's to capitalize on maximizing our passive income generation. So how can we start with $100 earning $10 a month and consistently month after month earn $2 more, $5 more, $10 more? So that way each month you're not making $10. The next month you're making 12. The next month you're making $25 a month and so on and so forth. If you're starting out with small amounts, if you're starting out with bigger amounts, then obviously, of course, your number is going to be higher. But the goal is to always work 2 steps forward, 1 step back, 3 steps forward, 2 steps back. Okay. We never want to be working 2 steps forward, 3 steps back, and so on and so forth. All right. So just keep in mind, this is our strategy. This is our objective. All right. It's to grow our rewards. It's to expand. It's not to trade. It's not to be greedy. It's not to leverage. I mean, obviously, of course, there's leverage options in DeFi. I'm personally staying away from that because I've already mastered a leverage market. I can go and leverage forex trading. I slammed and I have been slamming trades on GBP USD. I've been calling them out to you guys. That's my leverage pocket. That's my leverage niche. For me, DeFi, I don't want to mess with the leverage. I like the yield that we're getting right now. I don't need to be greedy and get into that avenue. And I'm going to explain why. And again, that's just my strategy, to each his own. I know that there's a platform out there called XtraFi, and I think that if you learn it, if you understand a trading strategy and you can apply leverage and accept the risk, then it's a great opportunity. Don't get me wrong. So we need to understand, especially this week, because I myself included, I'm going to be open about this, took an L this week based off of not necessarily emotional instability, but making a reactive decision because I thought the market was going to go lower, which it didn't on Klima. But I said we must mature and we must understand the inevitability of losses in the DeFi space. It is crucial to come to terms with this fact that not all investments will be successful. You need to come to terms with this because when you lose money, if you are not mentally prepared to deal with that loss, it will internally eat you alive in some way, shape, or form, result in you quitting and thinking that this is a scam. When you lose money, you need to take it as a learning mistake. So I wrote down, I encourage viewing your losses as a learning opportunity. Analyze what went wrong. Understand the market conditions that even caused that to happen. Okay. And then project specifics that led to that loss. So walk yourself through that loss, jot that down so that way you have data. Okay. And then take that data and apply that to lessons in the future of your investment career. So if the environment is shaped the exact same way, for example, you see risk off. At the same time, Kalima this week in the Discord was having issues and there was a massive situation that took place. I don't remember what specifically it was, but there was a little bit of a situation that caused some selling pressure and uncertainty in the project, right? Couple those things together. Well, we know what environment that creates. It created a massive pullback and throttling down of the APR on the Kalima pairs on Aerodrome. And so if those environments are shaped again in the future, we can assume based off the past data that we have that a similar or same scenario is going to fruition in the future. You get what I'm saying? So we can have that data to react in the future if we see that situation again, so we don't make the same mistake. I internalize that data. I've now collected it. And in the future, I will apply that where if I see the same setup, if I see, okay, this project's having issues, where at the same week, the dollar's super strong, it's a risk off market mood, hawkish commentary from Jerome Powell, which I know creates sell pressure on risk assets, all those things together, if I see them in the future again, I know to take profit. I know to secure my capital because I put money into Kalima when it was the price that it was when it tanked, right? Luckily enough, I didn't experience too much impermanent loss because I did get into Kalima when it was at a lower price a couple months ago, right? But still experience, and I'll get into the impermanent loss that I experienced or the permanent loss that I experienced because I took profit. I moved my profit from the pool to another pool. It was a small loss, nothing too significant. I did leave some profit in the pool, which again, I'll go over in just 1 second, but I'm just trying to talk through what I'm seeing. Okay. So I encourage you guys to learn and analyze your mistakes, what went wrong so you can learn from them. So I know now, again, what I'll be doing next time those situations evolve in the market. I wrote down, understand the importance of having a disciplined approach to securing profits. Okay. This includes setting aside a portion of profits into a safer, more stable asset class to prevent losing gains during market downturns. So we need to learn effective strategies for reinvesting our profits. This can include things like diversification into safer or different DeFi projects, utilizing staking rewards, exploring yield farming opportunities. There's a lot. Okay. What I'm personally going to be doing is from now on, I mentioned to you guys that I'm going to constantly funnel my money from these positions and back on top of the positions that I'm in. So like, for example, if I make $1,000 in a week on Aerodrome, previous to this recent market downturn, I was putting that money back into Aerodrome. I'm no longer doing that because, again, to revert back to my goal, because all of these things in my strategy are always going to fall back on my goal, which is to generate consistent growth, consistent passive income. I don't want to take on risk. I want to minimize my risk, but constantly scale and grow. And if that's at a slow pace, I'm fine with that. So instead of re-implementing my capital back into the liquidity pools with a cryptocurrency in a stable coin or a crypto in a crypto, again, dealing with that volatility, I'm going to seek to expand a separate portfolio in just stablecoin liquidity positions, where I've found some liquidity positions for like USDT and USDC that are offering upwards of 60 to 75%. And I'm okay with that, right? So from now on, the profit that I'm going to take, I'm going to utilize it to buy digital asset blue chips that I like for my long-term bag. So I'll probably take 20% of my money. So if I make $1,000, I'll take 200 and buy some XRP and put it in my cold storage wallet, or I'll buy some SHX and put it in my cold storage wallet, or I'll buy some Brett and put it in my, you know, safety wallet, whatever the case may be, right? And then I'll take 80% of that money and I'll put it into stablecoin pools that are earning yield. I'm no longer going to refunnel that money back into Aerodrome, so on and so forth. I am, however, on the precipice of deploying, I messaged you guys this morning, 3 grand into the magnetic decks. And I'm going to figure out what size I want my magnetic capital to be at, whether that's like 5 grand deployed or 10 grand deployed. I'll get to that point when I get to it. But on Aerodrome specifically, I'm not going to be refunneling the money back into Aerodrome. I'm going to find stablecoin pairs, liquidity pools that are offering yield moderately high, relatively 40, like above 40% would be ideal. Okay. And I just want constant growth. I don't want to deal with the volatility. I want to get to a point where I have $100,000 deployed in a stablecoin liquidity pair that's making me fluctuating, throttling down and up of 40 to 60% APR per year. I'm fine with making $40,000 to $60,000 in passive income. Again, the goal here is not to be greedy. The goal here is to create a business out of DeFi and just constantly generate that revenue while minimizing your risk. And so for now, I might learn another strategy or trick in the future, or you guys might say something when we get to the questions and comments and things of that nature on what you're doing, because it would be nice to hear you all openly talk about some point in time what you're thinking about doing. So that way we can bounce ideas off of each other and really build this strategy. That's what I'm trying to do with you all. I'm trying to like really you got to understand the power of what we could do. You ever seen that movie? I talk about this all the time. The ape movie, forget what it's called, Planet of the Apes, right? Where Caesar says apes together strong, apes separate are weak. Okay. Not calling us apes, but if we bounce ideas off of each other and we learn from each other, we can seriously turn this into something phenomenal. So that's one thing that I'm going to be doing is in my profit taking strategy from now on, I'm going to be diversifying, taking 20%, putting it into blue chip assets that I want to hold in my safety bags, and then taking 80% and putting it just in stablecoin liquidity pools. So that way that profit I know is going to at least at a minimum stay at what I put it in. So if I put $1,000 in, as long as USDT doesn't depeg and freaking crash like everybody's planning it's going to, then that money will be stable. It'll be safe. It'll be sound at that bare minimum. Again, because I'm going to be earning interest on that, it will constantly scale and grow. So I don't have to worry about the downside risk of that portfolio. Boom. I created an environment for myself where that just alleviates stress on my part because I personally don't believe USDT is going to collapse. So I honestly don't even worry about that thought. Okay. Anyways, moving on. I got 2 more slides for you and I'm going to let Mr. Mann take it away. Risk on, risk off. All right. This is why I stress the importance of understanding the fundamentals that I put out to you all. And if you actually pay attention, we knew last week, sorry, the week before last, when we had NFP come out, okay, we knew that the market was going to be in a downturn or start to pull back because we had what? Can somebody tell me what happened not this past Friday, but last Friday with the labor market figures? Can anybody just speak up and just tell me what we had that created more dollar strength in a risk off market mood? What did we have 2 Fridays ago?
We had higher labor figures.
Yep, exactly. Gordy, good job. We had high NFP figures. This showed that the US labor market is still robust and resilient. And remember, one of the things that the Federal Reserve said in order to cut rates, they needed to see a weaker US labor market. So when we see a higher figure in the US labor market, this pushes back the rate cut narrative, makes the dollar more appetizing for foreign investors, and creates a risk-off environment as that order flow into dollars comes out of risk assets like crypto, stocks, and gold, right? And obviously, of course, other G10 currencies like GBP, Euro, so on and so forth. Okay. And we knew that. We knew that here in this community. However, I did not. So like, because again, this is when I'm going to talk about my loss because I knew that. I knew that in trading. I knew that in forex, but I'm still learning how to implement that knowledge into DeFi. So what I should have done on Klima, when that environment switched hands and when I knew in forex it was going to create a pullback, I should have taken some profit off of the pools that I was in from the liquidity that I was actually providing. I should have taken $1,000 out because the liquidity that I originally put into Kalima, I don't remember what it was, wrapped ETH, I think it was. Okay. I put 7 or 8 grand in, but my actual value of the pool was worth like 12 or 13 grand. See what I'm saying? Because the value of Kalima went up and so did wrapped ETH at the time of the risk on market mood, the value of my pool slightly went up. And I should have taken that money, right? And I'm still learning that. It's not just about taking profit in the form of APRs that you're making, it's also about taking some profit from the actual money that you're providing to the liquidity pool, right? Okay. And again, this is a realization that I'm coming to terms with. I knew that, but now through a live example, I understand that next time we see these same market conditions where pretty much the entire month of May, guys and gals, we saw expansion. We saw a slight economic downturn. We saw disinflation. We saw a more dovish Fed, and this created and prompted a more risk on market mood. But as soon as June hit, that mood has now soured. I'm not going to say that it's going to continue. It could turn around. But ever since the beginning of June, that market downturn has been embedded into the market, and we should have capitalized on that on our actual liquidity positions. And so next time moving forward, I am going to start to incorporate that into my strategy. Full circle, you should not do anything I tell you to do. I am going to be taking $500 off of that to secure that profit and to use that profit to put it into stable coins. So I know that I've now locked in that profit and will consistently earn. And what that will do is over time, you all will see in my portfolio, instead of seeing this, if you guys can see my hand, instead of seeing this, you're going to see a rising equity curve. So just a full circle, I said to master any of these strategies that I'm talking about, we need to overcome two main psychological barriers. That's going to be fear and greed. Okay. We're going to need to overcome greed because naturally, when we're up in positions, when we're making money, when everybody's euphoric and we're seeing green and we're seeing high price predictions, we think that price is going to constantly go higher and we start to lose that goal, that vision, which is why I put this slide last, because to come back in full circle to our goal is not to become rich overnight. Our goal is not to put $1,000 into a Brett wrapped ETH, liquidity pool and turn it into millions in 2 months. Okay. When Brett was pumping, everybody was super happy and excited about it. That's why I'm using it as an example. So you could have put $1,000 into that pool, and because Brett went on a freaking parabolic run, your pool's now worth 5 grand just in the pool. And that's not even with the profit from the pool that the APR is generating. Take some of that profit. I will be looking into doing that so that way I'm securing the money that I'm making in this space. Okay. And so in order to do that, we're going to need to master greed. We're going to need to hold on to the idea that right now in DeFi, at least for myself, it's to constantly see a rising equity curve. So I wrote down, it is essential to remember that our primary goal is to generate sustainable passive income over a prolonged period of time, not become millionaires overnight. Greed can lead to holding on to investments for too long, risking potential profit. I don't want that to happen to myself in DeFi. So I'm going to incorporate profit taking both in APRs and both in the pools that I'm actually invested in. And that's going to require me to overcome my greed, just like how I mastered that in forex. I need to master that in DeFi. And again, I'm just trying to teach you all how I'm going to become successful. I'm going to become a six-figure entrepreneur in just DeFi alone. I've mastered six-figure entrepreneurship in forex. I've mastered six-figure entrepreneurship in online marketing and YouTube, right? And now it's going to be in DeFi. Okay. So conquering fear. All right. We must not be afraid to explore new opportunities and reallocate our funds. Taking calculated risks is a necessary part of growing our investments. Embracing change and adapting our strategies will lead to better outcomes and more diversified portfolios. All right. So we cannot be afraid to try new dexes, new platforms. We can't hug on to one. At least I'm not going to. If it works, it works. Don't get me wrong. We don't want our money scattered all over the place. We don't want to be in 1,000 different positions. But if Aerodrome ain't working at the moment in time, maybe it's having some hiccups, maybe APRs are throttling down, we got to move on. We got to move with the pace. If a better, new, more ramped up DEX comes and it's regulated and it's offering this and it's that and it's just 10 times better than Aerodrome, we got to move. We got to migrate. And I'm willing to do that. Again, you have to ask yourself, what are you going to do? Okay. For me, if I see a better opportunity, I'm going to move money. Don't be afraid to move money. Obviously, of course, make sure you're testing things first. I cannot stress enough. Test, 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 test. You should not be, for example, I have this $3,000 of MAG that I want to deploy. I'm probably just going to deploy $300 for like a week or two to test it before I then go and put that 3 grand in. You should be doing the same thing, sending test transactions, making sure that the pool or the positions or the dexes or the lending platforms that you're actually in actually pay you. You actually go through the process before you put 10 grand on a platform of using it with 1,000 or $100. So you know the flow. You know how to get your money from A to B with a test amount. So that way, when you're operating with $100,000 on one of these platforms, you're not sweating, fumbling the ball, missing a number in your private key or something because you didn't test it first. Okay. We got to be mature. We got to be strategic. And so this is just my approach. So